Hello, good afternoon. I wanted to go ahead and make this quick video for you so that way you can see the trades I took today. I took one on London session and I took 3 trades during the New York session. So with that being said, let's get straight to it. Now, what I'm going to go ahead and do is I'm going to go over to a blank chart. That way you guys can see my overall thought process and why I took these trades. But one thing I want you guys to really understand is the fact that you need to have a plan for every single trade you take. You can't just take a trade based off of guesses. You want to make sure that your trade is backed by a trading rule. So with that being said, always follow your trading plan. Let's get straight to it. Now as I go over here into Euro USD, one thing that I like to take a lot into consideration, especially when I'm trading, is the following. I want to make sure that I am on a correct time where market is actually going to be moving. Now, when I say on a correct time when market's actually going to be moving, is a time when there's going to be momentum. In that case, that could be when market actually starts having these big impulses. And the moment when market starts having these big impulses is going to be when banks open. Now, both you and I understand that banks open anywhere between 8 a.m. to 9 a.m. Therefore, we can anticipate those moves to happen around 8 a.m. to 9 a.m. So one thing I like to do is I like to go over to the time zone section. And if I'm trading London, I want to make sure that I am on the London time zone section. So I click on London and it's going to automatically change all these times down over here for me. Now, as I can see, during 8 a.m., okay, we had these big impulses. We can see that at 8 a.m., we had this huge impulse going to the upside. Now, this is interesting for me because it had a great impulse to the upside to a specific area. And that specific area is going to be right into this section over here. Okay, so as soon as I saw that market came into a specific area, which is going to be a point of interest from the previous day, I started taking interest into this for a potential entry. Now, as we can see, the following is that we were able to see that market went ahead and broke a structural level right in this zone. So we had that big impulse at 8 a.m. and now we're breaking structural levels. We do have targets over here, which is going to be imbalance and some type of liquidity to potentially attack during that London session. So now, very simple this setup was. In this case, one of the things that I looked for was the following. I saw my Tetris. I saw that market had broken market structure. And a very well fib level I personally like and enjoy a lot is going to be the 60-65%. So having this correlation of a 60-65% with my Tetris, understanding structure was broken, I'm able to go ahead and have that entry for that move. And that entry for that move was going to be giving us that specific move all the way to the downside, taking out potentially these liquidity zones right over here. Now, I want you to go ahead and see what we had going on my current trade, which is going to be the reason why I took this. As we can see, same area, we have that point of interest we hit, which is that Tetris. We can see how market came down, test, comes down, and then we continue on having that overall move. So it was very well planned out. Now, as we can see in this area right here, we do have a very nice point of interest, which is something that I took into consideration for my trade. And that's exactly this right here. So we're able to see that move, and market played out all the way into the liquidity zone down over here. Now, if we go back to the trade that I personally took, which was going to be over here in this section, we can clearly see that we were marking up for these lows over here, which we're able to go ahead and take out. Now, if we go over here to the one that I am marking up currently, we're going to be able to see that we are looking for those lows to be taken out as well. So now entering New York session, same scenario. What am I going to do? I'm going to go ahead and switch over from London, switch it over to New York. And as I go over to New York session, I can clearly see what starts happening. 7:30, 7:40. Oh, and what happened right here? 8 o'clock. 8 o'clock. What happened previously at 8 o'clock? We had that nice impulse. So what am I expecting? I'm expecting market to have some type of reaction, which is going to be impulse. Understanding that we have targets right over here, which is equal highs, things that I can understand that it gives me a reason why market can go to the upside. Another thing is that we have a nice point of interest right over here. And as mentioned prior, a nice fib level, which in my case, my favorite, anywhere between a 60 to 65% fib level retracement, which is something that I like to consider as a discount. And we can clearly see that these areas went ahead and took out those highs, and we continue going all the way up into the zone. Now we go over to the trade that I had previously, that I had on the live trade, which was today. We can go ahead and see that this is exactly what I was looking for. You can see the entry, you can see the reason why, and we can see that we went to the upside. Now, why was I targeting this area right here specifically for a potential 1 to 2 restore ratio? Now, we got to be able to understand that we need targets for every single trade, and we need reasons to why we should be getting out of those trades. So, as you can see over here, same setup. Now, in this case scenario, I just was a little bit shy because I was moving a little bit quick, but we have these nice highs over here that I expect the market to take out, and once market takes out those highs, then I can expect potential retracements. Now, third trade was going to be a steep discount. Now that steep discount we can clearly see right here. Another fib level that I personally like to use, which is going to be the 78.6 level. So in this case scenario, we can go ahead and see the following. Let me go ahead and delete this fib level, that way there's not too many things going on. But we can clearly see how market came up into a nice 78.6 level. Now what happened at the 78.6 level over here is we can go over to EURUSD, the trade that I went ahead and took. We can see how we came nice into that 78.6 level as well. But we can see how we had this huge impulse from move down to move up. We're hitting that 78.6 level. We did go ahead and go above the 78.6 level, but this personally was not the overall entry. The entry was located down over here in the zone. This was just an area for me to take into consideration for a potential trade, depending on how market was going to react based off of this imbalance. So we go over here. We can see very nicely how we hit that 78.6 level, and then we have that nice entry. Now that nice entry, I was basing it off of that point of interest, which we can clearly see in that zone, and we're able to take that move to the downside. So if we go ahead and just place our fib levels, we go ahead and place our trades, we can go ahead and see that we were targeting specific levels. Now those specific levels that we were targeting, we go over to our trade that we went ahead and took today, well I went and took today personally, is the following. Why was I targeting these areas? Because there's liquidity down over here, and I expect market to potentially take out this liquidity. This is going to be an area of potential reaction where market could possibly go to the upside, so I don't want to risk it too much and take it all the way down. Even though we do have previous targets to potentially take it out, I don't want to push the market too much. So this right here was the third entry. As we can see, we can have that nice 1-4 risk to ratio. Stops were right above those highs, and that gave me enough leeway to have that market move down. Now as market moved down, it presented me another opportunity. Now this next opportunity that I presented to me is the following, which is going to be a very interesting one. Now this following trade opportunity that was presented to me was based off of a also fib level that I personally like to use. And as we can go over here to the previous one that I had taken, we can see that the fib levels that I'm usually utilizing is going to be anywhere between the 65, 60, and the 78.6 level. Now in this case scenario, we had a fib level basing off from the start to this area to the end of this area, and it gave us that 60-65% fib level, which is exactly where I went ahead and entered. Yes, I had some drawdown, but again, we need to understand that drawdown is part of the game. You're not going to get in a trade and be very, very precise and not have drawdown every single time. So we can see fib level from top to bottom. I saw that nice impulse taking out, same scenario, we'll take out this liquidity, okay, taking out these lows. And where did we see this previously? We can go ahead and see, we saw this same setup right here, over here. If you take a screenshot, okay, if you take a screenshot, you'll see this right here, exact move over here. And what do we have right here? We have nice Tetris. What do we have over here? A nice Tetris, okay? And then right here, what do we have? Nice Tetris. Right here, what do we have? Nice Tetris. So what I was waiting for was for Mark to come and respect that nice Tetris for that fib level. Oh, sorry, this one is the first trade. And then the second trade was in that nice Tetris, which is at 65% fib level, which is going to be the last trade that I personally went ahead and took. And yes, we did have some drawdown for this specific trade, but again, we were able to go ahead and maximize those profits for a nice move. Now, as we can see, everything has a reason to why I am entering. I'm not just entering based off the blind. I'm actually entering with reasons why I'm entering. Stop loss, why am I going above here? Because this is the last high. If market takes out those highs, then more than likely market will continue on going to the upside. We got to be able to understand everything. So in total for today's trading, there was a 1-4 risk to reward ratio trade, there was a 1-2, there was a 1-4, and a 1-2 risk to reward ratio. So we had great moves happen today, a lot of opportunities to take advantage of. And again, these were the trades that I personally went ahead and took today for the Rocket 21 challenge, which currently just waiting for the spreadsheet. Hopefully we hit top 25 with these trades today. And one thing I want you to understand is that you always need to have a trading plan, and you need to be able to understand that you are going to trade based off your trading plan and not your emotions. So with that being said, I hope you enjoyed this breakdown, and I hope you can go ahead and learn a lot from it. If you guys have any questions, feel free to reach out to me via Instagram. I'd love to go ahead and answer your questions. And if you like this video and you would like to see more of these videos, go ahead and comment down below, or if it's in Telegram, go ahead and put a little heart emoji or like, so that way I know that you like this video. With that being said, see you next time. Bye bye.